Okay, welcome to this edition of Bitcoin Brief with Vays and Jimmy Song. And happy Thanksgiving to everybody who's tuned in from the States. It is Friday, 27th November. We have a lot going on in the news cycle this week. We've got Ethereum Classic planning a hard fork. We've got Chinese police have seized 4.2 billion cryptos from PlusToken, and so much more happening this week. But first, let's say hi to the rest of the guys. Tone, how are you?
I'm good. Thanksgiving dinner was great. I tweeted out about it. My family had a pretty big-ish Thanksgiving dinner. We couldn't tell any friends that we were doing it because who knows who's gonna snitch on you, and then the cops show up. This is what it's basically come to. But we had a great Thanksgiving dinner. No mask, to social distancing was mentioned. People were just careful, like don't hug your family too long or ideally at all. So we are being careful, but the whole masks and you can't sit 6 feet apart from someone that doesn't live with you in the house is just insane. Hopefully one day this will be better. I like your background, Jimmy. Is that Arches or just random places in Utah?
Yeah, it is Arches National Park, and I think that's the delicate arch. Well, no, that's not the delicate arch. It's like a really long spanning arch. I have a photo of the delicate arch, which I'll put up or something. But yeah, I wanted to do a new background. Thanks for noticing. But yeah, enjoyed Thanksgiving. I think the fact that people are not hugging their relatives is ridiculous and stupid. I actually had Thanksgiving at a restaurant because I have a lot of kids, so it's hard to cook all of that. So it was really good. Enjoyed the food, had a fantastic time. I feel terrible for the people in California who are being told that they need to put on their mask in between bites, that they need to go and talk, not spend time with family. And people, I think the mayor of Denver told everybody to stay home and not visit family. And then he himself boarded a plane and visited his family in Mississippi or something. So that tells you everything that you need to know about our elites that are trying to control us and not, subjecting themselves to their own rules. So lots of hypocrites, the whole lot of them.
Yeah. Wow. So okay. So Jimmy gave me shit. Okay, we were, and I thought I was, and I thought we were rebels by getting together with 20 people in a house, But no. I mean, I tried not to, hug my 76-year-old parents. You never know. I mean, I'm still like, out and about as much as I can. So I was a little extra careful, but considering to what they want you to do, that's insane. And yeah, Jimmy. By the way, if you were in states like New York. Or New York City, I believe, you wouldn't even be able to go to a restaurant because it's maximum 4 people to a table, even if it's 4 people of your household. So you would not actually be able to, no restaurant would legally be able to seat you. And then Las Vegas and Nevada, they're completely shut down. You can't even be outside without a mask.
Nevada, Las Vegas? That's really?
Yeah, Las Vegas, it's a full mask enforcement. You can't walk in the 100-degree heat outside without a mask.
Oh, God. Oh, God. Oh. Okay. All right. Before I go on a rant, let's get to the news. Save the rants for the news.
Jimmy, suddenly talking Ethereum and Ethereum Classic doesn't sound that bad anymore.
No, they're not nearly the authoritarians our governments are.
Okay, it sounds like you guys had fun, and at least you got to spend time with your family and friends, even with all the restrictions. So now let's take a look at some of the news that's hitting the cryptosphere this week. Ethereum Classic plans Thanos hard fork to restore mining.
You might want to share your screen first.
Sorry, just a second. Let me just switch over to screen share.
Yeah, do application.
Apologies for that.
It's okay, Florence. We know you. We know you're trying, and all you guys in the chat and stuff that are complaining. Don't.
Yeah, guys, stop complaining.
You got to give her a break, right? Like she's starting this thing. When's the last time you started a new job and did everything perfect, huh?
I was gonna say, if any one of you does it, you will never do it again after one episode.
Right. Ethereum Classic plans Thanos hard fork to restore mining with older GPUs. Ethereum Classic is planning to execute the Thanos hard fork, an upgrade that would ensure several more years of mining functionality for graphic cards with 4 gigabytes of RAM. This mechanism is an important component of ETH's resistance to ASICs. Memory is relatively expensive, and the constant growth of the DAG would eventually deprecate any ASIC and discourage heavy investment. Thanos hard fork aims to halve the size of the DAG, allowing 4 gigabyte devices to keep mining for another 3 years. The purpose of the hard fork is largely to attract more hash rates originating from Ethereum, which is also expected to completely throw 4 gigabyte miners off before the end of 2020. Due to the several successful instances of 51% attacks on Ethereum Classic, the community is looking to boost its hash rate and resistance to further manipulation attempts. So Ethereum Classic, just like Ethereum supports smart contracts and decentralized applications, and it's the result of a contentious hard fork of the Ethereum blockchain in 2016 after a decentralized autonomous organization, the DAO, created on Ethereum was hacked, and hackers stole about $60 million worth of Ether. So Jimmy, what's your take on this recent development?
Well, first of all, I think the hard fork was more a smart contract lawyer, not a hacker. They just found holes in the way that they did they wrote the DAO contract. I mean, this particular story is interesting because they're a completely irrelevant altcoin at this point, but the reason why they are hard forking is because of the 51% attacks that are happening on their network. I don't think this is neither here nor there. Like, making this hard fork doesn't actually prevent 51% attacks. You just need more of the devices, or GPUs are actually easier to rent and there really aren't that many ASICs for the ETC stuff. You have to remember that Ethereum Classic actually doesn't have that much utility, and you could do stuff that you could on Ethereum, for example, because they use the same scripting language or whatever. But like, nobody's actually come on Ethereum Classic because all of the reason people and. Well, let me say it this way. The reason why people make quote unquote dApps on Ethereum is not because of the utility. It's if it were, they would come to a place like Ethereum Classic or even Tron or Near or any of these other platforms. The reason why they stay on Ethereum is because all the suckers are there. All the morons that will buy whatever new coin comes out are there. So in a sense, Ethereum Classic has really no reason to exist, and they're trying to be a bigger scam than Ethereum. That said, the 51% attacks are going to continue happening even with this hard fork. If it stays at a higher price or whatever, exchanges are going to delist them as soon as the risk of listing these coins and getting 51% attack is greater than the profit that they're making off of whatever trading is happening on for that coin. So that's the sad reality of the situation, and that's how it is.
Okay, thanks for that, Jimmy. Tone, what's your analysis on this?
Yeah, I'm going to keep this short. We got so many stories to cover, but that's really interesting what Jimmy just said. Not that I didn't know it, but it's just that like hearing him say it, I'm like, okay. Let me elaborate on that. So to Jimmy's point, that the reason why everyone is launching on top of Ethereum is one, is because of that little bit of a network effect. But unlike a technological network effect or a utility network effect, it is more of the scam angle network effect, because too many idiots have too much Ethereum that they have nothing to do with other than invested in other projects. And getting people to sell their Ethereum into another scam coin to then invest another scam coin is just one degree of separation too far to do anything with. And but this particular thing is interesting because the Ethereum Classic people are watching Ethereum, and which is our next story, moving to proof of stake. So that means what happens to all the miners? Yeah, you can really jump onto that story. That's perfectly fine. What happens to all the miners? No, Florence, you were good. We're transitioning right to Ethereum here. So what happens to all the miners on top of Ethereum? This is one of Vitalik's problems. I've always made fun of Vitalik because back in the day during the DAO hack that Jimmy also mentioned, Vitalik sent a very infamous text message in a group chat that goes like this: "Hey guys, can you all stop trading?" Because they had to roll back the chain for other reasons. They have to figure out what's going on. So I'm waiting for Vitalik to send out another message or a tweet saying, "Hey guys, can you all stop mining?" Because they're gonna go to proof of stake, and they don't want to have another fork on their hands. And it's interesting that Ethereum Classic is trying to get as much of the miners from Ethereum as they can, making it more convenient for even the old miners that Ethereum is kicking off the chain in order to give them some hashing power to make it harder to do a 51% attack. But at the same time, if you can pull off a hard fork so easily, you're already centralized. It's just that the centralization through a 51% attack is centralization outside of your control. And like every other dictator of every other chain, you want to have all the control. So you want to have the dictatorial power to execute a hard fork in order to prevent a decentralized version of taking over your chain with a 51% attack. So it's like, which is worse? I don't know. It doesn't really matter.
Okay, thank you. Within the same topic, someone is asking Vitalik Buterin, 14 addresses deposited 51% of the staked ETH, really? Vitalik Buterin responds that that chart was from before most people deposited. It's 25. And someone says, but still 25 addresses is not what I expected to see from a decentralized network like ETH. Do you think that's normal, how things went? And Vitalik responds by saying it's significantly more decentralized than proof of work. Tune.
Oh no, what was that? There's one more tweet. There's one more tab. Nope, next tab. Go to the next tab. Right. Yeah. This is one of my favorites.
Yeah. So Zenda asks, at Vitalik Buterin says 25 users that have majority in proof of stake is more decentralized than proof of work. Pool operators in Bitcoin are not miners. They can lose at any point the hash rate if they try to abuse it. On the other hand, the oligarchy in proof of stake can never be pushed away. Tone, what's your take on this?
Oh, I also want to let Jimmy go first. Jimmy, you want to tackle this one first? Well, all right. So he's the whole scamminess of Ethereum 2.0 is kind of astounding, because really it's a new ICO, and he's trying to grab he's trying to do a new ICO, but calling it Ethereum 2.0. That's essentially what it is. And it's a whole new system with whole new rules and whatever. The problem here is the people like everyone on Ethereum kind of likes Ethereum 1.0 better, because that's where all the suckers are. That's where everyone that's actually paying money for idiotic DeFi projects and ICOs still are. So, he's trying to get people over, and one of the things that he's trying to promote is proof of stake. And of course, proof of stake is not secure in the least. It's just basically a bunch of people creating their own signatures. And he's trying to make it sound like it's actually secure. Actually, it's whoever has the most money gets the most say in whatever. It's oligarchy, whereas Ethereum 1.0, I guess, is more like dictatorship or whatever. He gets to decide whatever. So it's idiotic that he's saying that. Oh, he doesn't seem to realize that there are lots of different miners and they go into pools, and that each pool, it represents potentially hundreds, maybe thousands of people. Instead, he's arguing, if you pretend that each pool is one person, then we're more decentralized. It's idiotic. And he's always made like sort of bad faith arguments like this for as long as he's existed. And that's kind of what he does, is he confuses people that want to be suckered and gives them enough rationalization in order to stay on Ethereum and do whatever it is that he's doing. So Vitalik does what Vitalik does, and Ethereum's pumped as a result, and that's kind of what and they'll crash as a result too. That's just how it is.
Okay, thanks. John, do you have anything to add here?
Yeah, man, Vitalik is really doubling down on these delusions. I mean, like him and Charles Hoskinson, I'm sure have very good dinners, because both of them believe that proof of stake is more decentralized and somehow more secure than proof of work. Probably would have been a good time for me to promote my article on decentralization. I forgot, but check out ToneVays.com blog, and I wrote about decentralization. So this is interesting because lately more people have been actually messaging me and asking me about proof of stake. And the conversation usually goes like this. They understand proof of stake and they explain it to me. And then they ask me these puzzling questions like, Tone, but how does this make sense? Because they understand that it doesn't make sense, but somehow they think that Vitalik is smarter than them. And somehow it's supposed to make sense. And I've been saying that on my YouTube channel many times, that I think one of the things, like if you think about it logically, because I'm starting to talk a little bit more about the importance of running your own node. And I'm going to talk about that in our last story today a little bit more. And we need to do, Jimmy and I would need to do an Understanding Bitcoin podcast one day, where we talk about not only the importance of running your own node, but also how to actually do it. And I think a lot of problems happen. Like here's how I phrased it on my podcast recently. If you understand the reason why you need to run a node, by default, you understand blockchains more than Vitalik Buterin. It's the default position, because Vitalik built a blockchain that discourages the user from running a node. So if you understand why you need to run a node as a user, you understand the importance of a blockchain, and Vitalik doesn't. Jimmy can probably be a little more technical on that front. And like saying that, look, I understand. I mean, how do you start proof of work? The problem with proof of stake, you can't just magically create a decentralized proof of stake. All proof of stake has to start out as an ICO. You got to spread your token around. You got to promote your token. So at any point in time, it's pretty much proof of work, or it's an airdrop based on some proof of work in the past. But you don't know who's going to claim the airdrop. So you can't immediately go into proof of stake. It needs to be somewhat spread out. And then there has to be a big enough time period for people to enter that stake in. But having said that, just because proof of stake in Ethereum is going to be 1,000 different accounts, where 80 of them, you need 80 of them to create, let's say, 51% or whatever. You don't know if all those accounts are one person. But we pretty much know that all the mining is not done by one person. So, and mining is not what makes Bitcoin decentralized. And that goes back to my article. Mining is 1/3 of Bitcoin's decentralization. There's also running your own node, which you can't do in Ethereum by a regular user. And there is development. So I don't believe development in Ethereum is decentralized. Proof of stake eliminates an entire third of your decentralization, and you can't run a node. So what the hell is it? Like, what makes Ethereum decentralized? And the answer is absolutely nothing. And this only makes it worse. I think that Ethereum's mining is like the only thing that actually is somewhat decentralized in Ethereum, not as much as Bitcoin. And they want to make that go away. It's actually hilarious.
Well, it doesn't make it decentralized at all, because they get to dictate to everybody what's going to happen and when the hard forks are going to be. They tell them what the supply schedule is going to be. Miners in Ethereum are basically slaves of the developers, and the developers are led by Vitalik Buterin. So it's Vitalik's coin entirely. He has control over everything. And they don't provide, they provide at least some level of security, and it's kind of like having a standing army. Whereas if you move to proof of stake, they don't provide any security. It's just a bunch of signatures. There's no actual work being done. And that's, that's the direction that they're choosing to go in. They're becoming more and more like fiat money with every sort of upgrade that they make. And they seem to want that. I don't know. It's kind of strange.
Thank you. Those are some great insights, Jimmy and Toon. We'll need to move on to the next story in order to keep things in time. So Chinese police have seized 4.2 billion cryptos from PlusToken Ponzi crackdown. A quick take, a Chinese court has detailed for the first time the breakdown of all the crypto assets seized by police during the PlusToken Ponzi scheme crackdown. The seized assets are worth more than $4.2 billion at today's prices, and the court said the seized cryptos will be processed pursuant to laws and forfeited to the National Treasury. So the PlusToken was a pyramid scheme that lured between April 2018 and June 2019 over 2.6 million members, and the equivalent of over $2 billion worth of cryptocurrencies at the time, now worth more than 4.2 billion. So the Chinese courts have now seized these cryptocurrencies, and the proceeds are going to be forfeited to the National Treasury. So what does this mean? Are some of these funds going to be returned to the people who got scammed? Toon, what's your view on this development?
Yeah, if you scroll down a little bit, there's a chart of, and you can see that most of it was obviously in Bitcoin with, some of the other ones. So here's what this tells me. I did not realize, so there's two things. First of all, they were able to, this is a lot bigger than I initially thought that it was. I mean, I thought the majority of the scammed coins were already sold, but now it appears that $4 billion worth of Bitcoin mostly was confiscated, which raises the question, how the hell do you let the government confiscate $4 billion worth of your cryptocurrency? It really starts to question my domain unconfiscatable because of, this insanity. I mean, these people are already doing 11 years in prison. If you're going to give up $4 billion worth, you should be able to negotiate a lower sentence or just hold on to it if you know how to properly protect your Bitcoin. So I have no idea how the hell of course, there's always, other torture techniques to get the money if the government knows how much money you have. The other interesting part is the Chinese have no intention of giving this money to the victims. They straight up saying that they're going to keep it for their national treasury. So are they any different than the initial PlusToken scammers if the Chinese government is just going to keep the money? So it's interesting. I really hope they sell it through OTC markets and don't, not on the open market, because that's a big chunk. And this is why people need to be smarter. When you are, I guess I can't blame these people because they were scammed into this, just like, every other shitcoin. But I mean, this isn't that different. Man, back in the day, and I got a lot of shit for this statement. Back in the day, I said that Ethereum was worse than BitConnect. We are talking 2016, 2017 days when BitConnect was becoming popular. And I said that Ethereum is worse. And I defended that statement by saying that the reason why Ethereum is worse is a bigger scam than BitConnect is because BitConnect's days are numbered, and people will be free of the BitConnect scam very soon. But the Ethereum scam is going to be, a drag on the crypto space and the world and humanity for an unreasonably long period of time before it eventually implodes. So, these PlusToken scams are no different than almost every other shitcoin. And it's unfortunate that such a large concentration of crypto ends up in the hands of people that are not actually making society better. Like, I have no problem with Jeff Bezos having $100 billion, or Elon Musk, or any of these other guys. Bill Gates, I'm not a fan of. But back in the day when he ran Microsoft, look, he deserved it. Having computers around the world, or having Amazon and having AWS, makes the world better. So he deserves all that money, and he's earning it by creating those products. Same thing with Elon Musk. They deserve that money. But giving this much money to the hands of straight up scammers that don't actually build anything to make society better is very disappointing. I'll leave it there.
Okay, Jimmy, do you want to weigh in on this?
Yeah, absolutely. So the interesting thing to me is not that people got scammed. People get scammed all the time. The scale is quite surprising. This is a lot of freaking money. Of course, most of the scamming was done when Bitcoin and all of these other coins were at a lower price. But still, this is a significant amount of money that these scammers managed to get. The more interesting thing to me is, what is the Chinese government going to do with all of this? Are they going to sell it? Are they going to keep it? What are they going to do? Because at least with Bitcoin, I think the market can absorb this kind of, however much it is. I don't think it would be too difficult for the market to absorb it. It'll have some effect on price if 200,000 tokens are being sold, but it's not unheard of for significant sizes like this to go on the market. The more interesting thing is all of these other coins, because that's not a small amount. Despite this chart, these are still a significant amount of these market caps, and a lot of these coins are tiny in reference, especially in liquidity compared to Bitcoin. So, for example, I think Litecoin has over 1 million coins or something like that. Now, that's a lot of Litecoin. If you sell that much Litecoin on the market, it will crash the price down to one third of what it is, at least. There's just so little liquidity in Litecoin and so little demand that it'll absolutely devastate the price, and control things like XRP even worse, because XRP has very little liquidity.
Jimmy, how embarrassing must it be for the Lightning fans and Roger Ver that the amount of XRP these people scammed out of the general population dwarfs the amount of Litecoin and BCH they scammed out of people?
Yeah, which is kind of, I guess that explains a lot of the XRP run-up and things like that. But regardless, all of these coins, if the Chinese government decides to sell these, these are going to have some significant, effects on the prices of all of these tokens. Now, law and things like that tend to take a long time. So I don't expect these coins to come on the market for another year at least. But that said, once it does, there's a pretty big price crash coming for a lot of these tokens. And can't wait.
And if the Chinese government does hold on to this another year, they may decide to keep the Bitcoin because it's pretty damn valuable in their government treasuries. And and if they choose to keep the Bitcoin, there is a high probability they're just going to market sell all this other shit for Bitcoin.
That would be amazing. And then they can have a reserve asset that's not the dollar. And it would be a not insignificant amount, especially if Bitcoin goes up by 10x or something like that, in which case it'd be I mean, you're starting to look at significant, like a decent percentage, or at least like 100 basis points on your reserve or something like that. So this could get pretty interesting. So it's worth watching.
And if there are smart people in like the Chinese government's Treasury Department or whoever is responsible for this, not to mention someone is holding the private keys to this now. So I hope the Chinese government knows how to keep their security in check, because if they can confiscate this amount from some guy, you got to get your things in check. But it would be interesting, because if Bitcoin does go up 5 to 10x before they have to make decisions on what to do with this stuff, they can literally pump their own Bitcoin another 2 to 3x by making an announcement that they are selling the rest of this shit for Bitcoin, and they're keeping the Bitcoin in their government treasuries. That alone will probably pump Bitcoin 5x.
Yeah, well, I'm sure with sizes this large, they're going to try to go through an OTC desk. Just that the OTC liquidity is not going to be there either, especially for XRP or Doge or Dash. I mean, like, where are you going to find liquidity for those? That's it. This will be an interesting thing to watch. China might just have started the central bank accumulation of Bitcoin. Who knows?
Right. And honestly, and this takedown of the PlusToken could have been, planned for that. I mean, that's the easiest way to get, 3,000 Bitcoin? No, wait. How many thousand?
No, 200,000 Bitcoin.
200,000. Thank you. I saw a 3,000 number. That's in dollars. Right. So 300,000 Bitcoin, you said?
No, 200,000 Bitcoin, $3 billion worth
right,
of
200,000 Bitcoin. I mean, that puts them in probably the top 5 biggest single Bitcoin holders. Probably they're in the top 5 single.
Yeah, they're up there. There are exchanges that have more than that.
Oh no, but the exchanges aren't single entity holders. What I mean, like the exchanges are holding them on behalf of many people.
Yeah,
this is a single entity holder.
Yeah, I mean, they're holding it on behalf of their entire population.
People really?
Kind of. I mean, even if it's just the elites, it's not more. It's not one person.
No, but I know, but the people don't have a claim to it. Like, for example, with an exchange, I can put in a claim and get it. Like the people of China can't put in a claim and get their little piece. So to me, this is a single Bitcoin holder.
It's debatable. We'll see.
Well, we all hope that the Chinese government will distribute some of the money to the people that got scammed as well, but who knows? Okay, a lot of people are upset with Coinbase and blaming them for the recent price crash. Bitcoin recently crashed from about $19,400 to down to $16,000, and we have crypto exchange Coinbase plans a recent release that crypto exchange Coinbase plans to end all margin trading starting November 25th, 2020, due to recent regulations by the Trading Commission. The San Francisco-based trading platform announced on Tuesday. In addition, Brian Armstrong is also announced that the Trump administration may rush out burdensome crypto wallet rules. So here he was responding to rumors that the Trump administration may rush out burdensome crypto wallet rules. Brian Armstrong is worried that the Trump administration is about to send the cryptocurrency industry a parting gift. And this proposed regulation would, we think, require financial institutions like Coinbase to verify the recipient owner of the self-hosted wallet, collecting, identifying information on that party before a withdrawal could be sent to that self-hosted wallet, Armstrong tweeted. So, Tone, do you want to give your view on this?
Sure. So, it's interesting. I actually have a question for Jimmy as this goes. So I did tweet out, and I did mention, I referenced the article, and I basically said, so Brian Armstrong is now upset that the US government is not being hands-off on the regulation. The US government is not taking the same approach as they did with the internet, letting this develop. And I'm continue to be critical of Brian Armstrong, who blocked me on Twitter years and years ago. And that, well, Brian Armstrong is also anti-Bitcoin. He always was. And he's into shitcoins. He's into selling you scams. And now he's upset that the government is regulating. Maybe if Brian Armstrong did a better job self-policing this space, he can then have a better dialogue with the government in order not to make any regulation on Bitcoin and keeping it a little bit freer. So no, I don't feel bad for him, but the consequences of this are interesting. He's saying that the regulation would somehow force him to KYC where you're sending your money, if you're sending it to your own node or your own self-custody. My bigger concern is the potential regulation on self-custodian wallets, especially the ones potentially out of the US. So Cold Card is out of Canada, Trezor is out of Prague, Ledger is out of France. So they're not US companies, but there are a few companies building self-custodianship tech out of the US. And what happens if the government tries to enforce some kind of a KYC on those companies? I mean, those companies, they can't enforce it. So do they shut down? They have to move out of the US. It's a stupid effort on the side of the government. But the reason why it's happening is because people like Brian Armstrong were too busy focusing on shitcoins than educating the government that this effort is futile. And that's my problem with the situation.
Okay, so Brian Armstrong tweets that he fears that this type of regulation would kill many of the emerging use cases of crypto and would also put America's status as a financial hub at risk. Are these fears legitimate? Is this type of regulation inevitable? Was it a long time coming? Can it be avoided? Jimmy, what's your take on this?
Well, so I have a different take than Tone. I mean, basically, the CFTC is saying, hey, Brian, you need to lobby us a little more than you currently are. And the one thing I know about Brian Armstrong is that he's not doing that much lobbying, not paying off all of the politicians and getting into their getting on their good graces, because that's the game that you're supposed to play once you get to a certain size. And you could see, we're not going to talk about this story today, but there was a pretty bad story written about him by Nathaniel Popper about Coinbase and all that. But we could leave that aside. The whole point of this action is saying, oh, okay, like you need to pay to play, and that's and Brian kind of is, I think, maybe a little idealistic on this regard and saying, well, no, we're not, and all that. Like in a few years, I'm going to predict that Coinbase will be lobbying everybody and asking for the exact same regulations that so that they can prevent competitors from coming into this space. That's how big companies normally act in any sort of thing. So it's basically the government shaking him down. He's a little bit intimidated, but yeah, it is what it is. But I don't have any love for Coinbase. They're very much a bunch of people that want to promote shitcoins instead of Bitcoin, and he was one of the big proponents of SegWit 2x, which we all know was an industry takeover attempt, and they failed. So that's largely why he went to all these altcoins and so on. So he's kind of stuck between a rock and a hard place. He's not with the Bitcoin community, And he's also not completely in the regulatory orbit of the US. So he, yeah, I mean, I don't know if that's necessarily a very good place to be, given that he doesn't really have allies.
Yeah, I find it surprising he remains the CEO of Coinbase still after everything that's happened to that company.
Well, I mean, there certainly calls for his resignation, and they will continue to come, but we'll see. I mean, he's made a lot of money, so we'll see what happens with that.
Okay, thank you so much. I mean, one of the major ideas behind Bitcoin was and still is decentralization and inclusion, and the world should be moving towards this, not away. So let's hope that regulation doesn't prevent this from coming to fruit. Okay, so moving on to another story. PayPal suspends users for crypto trading using PayPal's own service. A PayPal user stated that the system flagged my account thinking I was selling items worth 10,000 in 1 week when I hadn't done so in the last 6 years I've held a PayPal account. The user said I submitted the stuff for review with my photo ID and wrote PayPal crypto for each crypto transaction, because what else could I say? So this is just one of many incidences of PayPal freezing users' accounts for reasons that are quite nebulous. Tone, you spoke positively about being able to buy a Bitcoin from PayPal. What do you think about this recent incident?
Well, this is completely not surprising. Even on this channel, when the PayPal stories initially broke, I said that, well, PayPal's goal is to just let you buy and hold your Bitcoin with them. But by them offering you to do it at no fee, I said people would treat PayPal like an exchange with a zero fee, trading in and out of Bitcoin because it costs you nothing. And PayPal is realizing this now because they have all these guardrails and all these preventive measures on, you know, you are using your money too much. I mean, that's their job. If they monitor everything you do, and they have automatic processes saying that, hey, if this guy makes too much money or too little money, or he's sending too much money, or he's receiving too much money, or he's sending it to the same person too much, freeze their account. And all of those metrics are there, but you just gave people an opportunity to trade Bitcoin for free at no fee, when some other exchanges are charging them a percentage fee. So you can see how the two instances are going to clash. And this is why very often you want to be using services that charge you money for those services, because they have certain customer support that they are responsible for when you're not getting something for free. And this is what's going to happen. PayPal has all these limits, so especially around the $10,000 mark. And if you're going to trade $1,000 worth of crypto 5 times a day because it's free for you to do it, you're going to learn real quick how fast your PayPal account gets, you know, suspended for a month.
What are your thoughts on this, Jimmy? Does this come as a surprise to you at all?
Not really. PayPal's always been kind of this very aggressive company with regard to their users. You know, they've shut down lots and lots of accounts. They have a very, very strong fraud department, and they're very aggressive. So if there's any sort of hint that anything is going wrong, they will shut down your account. They're kind of a company run by lawyers, and you can try this. I used to work at a web hosting company, and if you tried to take out a domain, like we had a special pathway for any domain that said something that was like paypalsucks.com or something like that, because they would come and sue you right away. It's a whole company kind of run by lawyers, and it's not surprising that like anything that even sniffs of sketchiness, they will shut you down. And this is why you don't really want to do this with crypto, or trade any Bitcoin on PayPal, because they're kind of worse than most banks in some ways. And you should much rather self-custody your Bitcoins and not have them tell you what to do, because if they shut down your account, which has like 5 Bitcoin in it or something, I don't know if you could get those Bitcoin back. And like there have been lots of people, sellers on eBay and so on, who have had significant amounts of money, locked in their PayPal account for years and years, because they PayPal flagged them, and it's just sort of in litigation for a long time. So I mean, that's the history of that company. So I would be very, very careful doing anything with them, and that's what it's going to be like.
All right, thank you so much for your insights. So prominent Twitter personality Raoul Pal, who is founder CEO of Global Macro Investor and Real Vision Group, a business cycle economist and investment strategy, recently released a tweet yesterday saying that if you think that secrecy from governments and no KYC is Bitcoin's future, then you don't understand what adoption looks like. They will regulate it, you will declare it, you will have to do KYC, and that is fine. It doesn't take away its store of value, but just integrates it. So that's Raoul Paul, who believes strongly that there will be no mainstream Bitcoin adoption without strict KYC in place. So this is just one of many people on Wall Street who think that Bitcoin needs to conform to get adoption. So we have, what's your take on this, Stone?
I'll let Jimmy go first.
Oh, Jimmy.
Yeah, I mean, I think he's kind of ignorant of what's going on and doesn't really understand Bitcoin, because that's, I think he said in a later tweet that he was warming up to XRP or something like that. He doesn't get it yet. And the thing about a lot of these guys that come into Bitcoin is they have this attitude of, I just learned about Bitcoin and I'm here to fix it. Or they think they know everything because they just heard about it and they have all this other experience. You have to understand that Bitcoin is a new thing. And a lot of people that come into it don't necessarily have the humility to really go and understand it. And I think Raoul is one of those guys. He thinks that there will be, that there will have to be KYC. He doesn't really understand what what you can do with Bitcoin and all of the things that are around it. Can the U.S. government impose restrictions? Of course, they do all the time. But can you get around them? Absolutely. And that's one of the strengths of Bitcoin. The fact that he's like warming up to XRP is he doesn't get this part of the equation, and he doesn't really understand it. He's going down the altcoin rabbit hole. I would say he's not far enough into Bitcoin, and he needs to check his ego before he makes statements like this, because it's kind of idiotic.
All right, so you don't agree for sure. What about you, Tone? Do you agree with this statement? Do you think he has a point, or is he very mistaken in thinking this way?
I don't agree with the statement. He has a little bit of a point, and I understand the point. But as Jimmy said, he's also talking about XRP more recently. By the way, I will be on his show. I'll be a guest on his show, but that's not happening until January, and that's like 8 years in the world of Bitcoin. So we'll see what's gonna happen. It could be sponsored by Ripple. Who the hell knows by then? But so here's my take on it, and I did tweet it out. It's in your next tab as well. Just my general comment on it, in that he's now seeing it, and I said the same thing about Michael Saylor. They are, and this has been my theme lately. People are discovering the store of value property of Bitcoin, and they are falling in love with the store of value property of Bitcoin without understanding why that store of value property exists besides the 21 million cap. There are other factors that make Bitcoin a great store of value. It's not only its scarcity. So if you look at Bitcoin from the tunnel vision view, that the only thing that matters is store of value, and the only thing for that store of value to matter is finite quantity of Bitcoin, then from that tunnel vision view, he is probably correct, because by forcing KYC, it makes it easier for big businesses to get in, makes it easier for rich people to get in, it makes them more comfortable, and they have a lot of money to put into Bitcoin, and because of its finite supply, its value will rise. So from that angle, he's correct, but here's where he's wrong. That's not the only property that makes Bitcoin such an amazing store of value. It has two other properties that I have always ranked more important than its finite supply. Jimmy disagrees, but this is one of our little debates. I believe that Bitcoin's unconfiscatability, the PlusToken stupidity aside, is more critical to Bitcoin's store of value sales pitch, and its ability to be a censorship-resistant value transfer. It's not always fast, it's not always cheap, it's not always private. Hopefully, in the near future, it'll be fast, cheap, and private. Right now it isn't, but that's okay. But the ability to have censorship-resistant value transfer and an unconfiscatable asset, to me, is what drove me into Bitcoin. It wasn't the fact that it's 21 million Bitcoin. It wasn't the fact that it's finite. It was those two properties. And by assuming that KYC is the greatest thing since sliced bread for Bitcoin, you are literally destroying the other two properties that make Bitcoin valuable. Not to mention, what's his definition of mass adoption? As a store of value, as something to keep in your basement? To me, mass adoption means you're actually using it in commerce. So I'm not expecting mass adoption anytime soon, because obviously the store of value property has to propagate throughout the world more. People have to be wealthier in terms of Bitcoin in dollars, but in holding Bitcoin in terms of dollars, they have a higher standard of living prior to it being adopted as a medium of exchange. But it's also important. And by having this view, you're basically calling for the destruction of Bitcoin as a medium of exchange that it was meant to be. So this is the this is like the unfortunate misunderstanding of what actually makes Bitcoin valuable. And in that tweet, I pointed out that the destruction, the US self-inflicted destruction as the world reserve currency and the world superpower is basically being undermined by their AML KYC laws. FATCA, Bank Secrecy Act, the Patriot Act, all of these restrictions on people's use of money is what's going to destroy the US dollar. The US dollar could be an amazing, can dominate the world for decades and decades to come if they were relaxing the KYC AML regulation, allowing the world to freely use dollars, especially their own citizens. But they're not doing that. The US government is forcing US citizens to dump the dollar for Bitcoin. And I don't believe it's mostly because they're printing too much money. I think it's more because of the AML KYC laws that are driving people into Bitcoin, even more so than the money printer. Jimmy will disagree with me on all of these a little bit, so I'll give him the floor.
Yeah, I do disagree, because in a sense, when you say that it's a store of value, the fact that you are self-sovereign over it is a large part of it. The unconfiscatability is a giant part of the store of value proposition. If you had to have it with a custodian, then it's not really that great a store of value because they are a trusted third party. The great thing about Bitcoin is that you get to store value on your own without having to rely on other people. So I don't think you can say unconfiscatability is really a medium of exchange property. It's just as much a store of value property of Bitcoin, and that's a significant thing.
No, Jimmy, I agree with that. Like, that's actually what I said. To me, it's three properties: unconfiscatability, censorship-resistant value transfer, and the finite supply. All three contribute to store of value. The medium of exchange also contributes to medium of exchange.
Well, so I don't think it's that important, honestly. Like, the much bigger thing is that, well, first of all, you don't need to transfer it that often if it's a really good store of value. You only need to do it when you're actually spending it or whatever. And you don't need to do it in like tiny chunks. You could do it in a bigger chunk. Now, getting it into that form is where this KYC AML stuff goes, and I agree that that's not great when you're required to do that in order to pay for whatever, like if you want to pay your credit card bill or whatever, and you have to transfer it to your bank, and you need to go through all these AML KYC things. Well, that kind of sucks, and that is going to put a damper on a bunch of things, and I agree with that part. That said, I don't think it's that important yet, and I don't think it needs to happen at the on-chain level. And I don't think it's something that's going to be that important for the foreseeable future, at least, because the thing that people need way more than a new way to pay for something is a good way to store value, because the only real stores of value that you have right now are gold, stocks, and real estate, and all of them have their own problems as far as like storing value. They're not very fungible generally. They're very hard to transfer, and they have a significant cost when you trade them or go in and out of them. So in a sense, Bitcoin is way better than those. But with payments, there's so many options right now. I mean, like literally hundreds of options, and every single company that's doing it, I mean, they have all the motivation to do it because they take a tiny percentage of such a large amount of transactions. I mean, literally every giant tech company has been doing this. Every country is moving towards this. Every credit card company is doing this. Every bank is doing it. There's so much in that realm, and it ends up being fairly easy to regulate because there is a trusted third party in that regard. But yeah, I mean, I don't think KYC Bitcoin is the future unless there's a third party custodian. As long as you're custodying it yourself, I think it'll be okay. And as Tone mentioned, I think the black market will grow as these restrictions become more and more restrictive. That's just how people are. If it's too oppressive, then people start getting around it. This has happened in all throughout history. You get quote unquote black markets, which are just really markets that the government doesn't control because the government is oppressive. And if you're going to want to KYC every Bitcoin, that's what's going to happen.
I'll jump back in that once again, as happening to me more and more in all of these conversations, it comes down to the following question. Do you understand why you need to run your own Bitcoin node? And it's very clear that Raoul Pal doesn't understand why you need to run a Bitcoin node. So at the moment, he's on the same level as Vitalik. Once someone understands the reason to run your own Bitcoin node, things change, because you can't run your own node in Ripple. You probably could in Litecoin, but in a lot of this other crap, you can't run your own node. And if you can't run your own node and you can't validate and process your own transactions, you are not you can't even be you're not even in the same hemisphere as Bitcoin. Like the only other coins that can at least be in the conversation, at least be in the room, to be made fun of in the same room as Bitcoin, are the tokens where you can validate your own transactions with a node. they can be made fun of in the same room. Everything else where you can't validate your own transaction with your own node is not even in the room to be made fun of. And it's all going to come down to, do you understand why you need to run your own node?
Okay, thank you so much for your insights, Jimmy, Tone. So now we're going to move on to the mempool. Let's take a look at the Bitcoin transactions. Jimmy, take it away.
All right. Well, can you switch to the mempool tab so I can see? All right, scroll down just a little bit. You could see that, you know, well, you put it in the 1 week mode instead of the 1 month. Yeah, let's wait until it updates, and they do have the, yeah. So you can see that the price action this past week has definitely you know, caused a little bit more in terms of, you know, transactions and so on. There's certainly been a lot of transactions that have been coming into the mempool, probably because of the big crash yesterday and the day before and so on. But yeah, I expect it to clear over the weekend. 35 megabytes is really not that much. Right now, if you want to get in on the next block or so, you're going to have to pay 50 to 70 sats per byte. But if you're willing to wait a few hours, I think, you know, towards it is Friday, and towards the end of the day, it should clear down to 10 at least, probably more into like the 5-6 range. And if you're willing to wait the weekend, I'm guessing all of the 1 sat per byte transactions will clear like it did last weekend. So yeah, that's that. The mempool doesn't look too bad, and the price action is going to dictate what's what's going to happen next week, I think.
Hey Jimmy, I had a question for you. What's with the sharp like shifts of the graph? Is that like a bug on the UI? Because that doesn't make functional or logical sense.
Well, it's usually that's around the time that BitMEX releases a whole like. They only have withdrawals once per day, and all of those go straight into the mempool at once. So that's why you see the big spike. In the case of these spikes, though, these look like 1 sat per byte transactions that are just going into the mempool at a particular all at once. I'm guessing these are maybe like you know, exchange consolidation transactions or something like that. And you know, they can be fairly large. So I mean, it's like 4 or 5 megabytes worth of stuff like that. You know, those are the giant step functions, but it brings everything else up because of that. I think when they had the colors reversed, it looked a little better, and where the 1 sat per byte ones were on the top. But yeah, it is what it is.
Okay, thank you so much, Jimmy. I want to remind everybody to pick up a copy of Programming Bitcoin by Jimmy Song. He is also the author of the Little Bitcoin book, a great book to pick up if you want to learn how to program Bitcoin and find out why Bitcoin matters for your freedom, finances, and future. Thank you so much, Jimmy. I also want to remind people that the Unconfiscatable Conference is happening in April of next year in Las Vegas. You will get to meet Jimmy Song and Tone Vays in person and learn more about technical analysis with regards to Bitcoin from Tone, as well as Bitcoin's technical aspects from Jimmy. So thank you so much, guys.
Thank you for that, Florence, and thank you again for hosting. And yes, Unconfiscatable is scheduled for the end of April. Tickets will not go on sale until next year. At the moment, Las Vegas is more strict than California when it comes to masks, which is insane. But this is the brain dead world that we are currently living in and have to deal with. A lot of people are asking questions about nodes. I'm not an expert at nodes, so we will save this topic for another day. The most important thing right now is not to immediately run out and build a full validating node. The most important thing for you guys is to start Googling why you should run a node. And you can't be scammed on the information of why you need to run a node. So before you start running your node, you need a full understanding as to why you should. And if the information as to why you should run a node convinces you, which it should, to build a node, you will then take the building of that node more seriously, and bitcoin.org is a good starting point. But then from there, I will talk to Jimmy about putting together a good list of resources, and we'll have them in all of my video descriptions. All right, guys. Okay, let's talk a little bit about price. I'm still keeping an eye on what the hell is going on in the Bcash fork. I don't really know what's going on. Sometimes holy shit, this is not what it looked like this morning. So there's clearly a malicious miner on there that is mining empty blocks. And every now and then, Via BTC mines a real block. And then every now and then, someone else wants to come in and swoop up and pick up, a bunch of transaction fees, though I don't know who's transaction there for what. Is this thing still like functional, or is it like dead? But if it's dead, why are there still miners on it, Jimmy?
Well, it's not dead, and there's a lot of BCH people that want to dump their Bitcoin ABC. So there's a significant amount of transactions that are in their mempool, and unfortunately, there's a malicious miner that's mining empty blocks. So a lot of people are kind of frustrated because they're trying to send their BCHA over to an exchange to be able to sell them. And of course, because their hash rate is so low, the exchanges are wanting like lots and lots of confirmations, and that's sort of delayed the actual selling of BCHA and held up its price for a little bit. I don't know what the price is right now. You can, I guess, go check CoinMarketCap or something. But it continues to be this way. I think they probably had some sort of like difficulty adjustment, because that's a lot of blocks to find in like an hour, like 20 blocks or something like that. So tells me either the hash rate is really, really low, or that there's somebody doing it for some reason. All right, let's look at BCHA as
I want to see what the price is, but like
it's BCHA. That's it's not going to be on the. You're going to have to search for it, and I don't think it's in the top 100.
It didn't immediately go into the top 10 like the other scam forks.
No, you got to search BCHA. There you go. All right, let's see where we are. $17. Yep. So it was up around $30. So it's come down a little bit as some of those transactions to the exchanges have occurred. So yeah, like it's I don't know. It's you wonder if they're doing those empty blocks as a way to 51% attack the exchanges that are accepting them, because that would be a good way to get rid of BCHA liquidity, is by basically screwing over the exchanges that list them. That might be a strategy. I don't know.
I think the price is holding up pretty damn well.
So far, that might it has to do with supply and demand. There's not a lot of supply being able to hit the exchanges because of all of the malicious mining that's going on. So I don't know.
Interesting. All right, cool.
Yeah.
Oh, we'll keep an eye on that. So I'm not gonna lie, the MRI sales have picked up this week, thanks to an absolute perfect call that Bitcoin is gonna top imminently. I started exiting at the end of last week. So about a week ago, I started exiting at the end of last week. I said I was gonna exit more this week. I exited a little tiny bit more. I was hoping to get out today. I was hoping it would be hitting the high today before the big drop. The big drop came a couple of days ago, 2 days ago, or a day and a half. And here we are. The MRI has done its job. And of course, people are asking, well, now what? Well, I don't know. Like this is like the indicator warns you that you may want to get out. I would not short Bitcoin in a bull market. I was shorting Bitcoin in the bear market back here. This is where I was still shorting Bitcoin. So I like to short Bitcoin in a bear market. I only like to buy Bitcoin in a bull market. And to me, the bull market, while I did buy Bitcoin back here, I didn't feel comfortable with the bull market until March of this year after the big crash around the early COVID days. So since we're in a bull market, I have no interest in shorting Bitcoin, no matter how great it looks. Like normally, this is a beautiful short. We have a monthly MRI warning, and the monthly MRI top is going to be here in 3 days because that would be the MRI top candle, similar to the prior ones. I have been looking at the Heikinashi version, mostly because it is just cleaner. It's always been cleaner, and this is going to have its MRI top next month as well. So once again, just 4 more days. The hyperwave has been canceled at this point because the phase 7 can't go beyond horizontal. So I no longer need this chart, and we're going to close it and free up a little bit of room. Now the weekly is calling for a 1 to 4 candle correction. Clearly, this is candle number 1 of 1 to 4 candles. So once this week closes red, the weekly has played its role. However, the monthly also calls for a potential of a 1 to 4 candle correction, but that rarely happens. You can see how the last couple of times we had these monthly ones, other than the very first one, we continued going higher. So I'm not actually expecting a 1 to 4 month correction. I'm just expecting a 1 to 4 week correction, and the monthly will have more of a consolidation. And therefore, I have a beautiful buying opportunity set up for myself around 14,000. Are we going to make it to 14,000? I don't know, but I am not buying current levels. I'm not yet buying back in. Here's the daily chart. As you can see, we are now working on a brand new daily low close, which does put us back significantly lower than all of the areas where I sold my position. So I got plenty of time to get back. And if we fall a little bit lower, if we swing down into 15,000, I would then be interested in buying Bitcoin under 15,000, or I would need Bitcoin to come back above probably this candle's high or this candle's open. So somewhere I want to buy it before it gets back to 17. So if we swing and make a new low, even by $1, at that point, I will be buying Bitcoin as we cross 17, or I will be buying Bitcoin in the vicinity of 14. If we go down fairly slowly, there could be a very nice buying opportunity right here at around 15,000. It would be a combination of the support line from the MRI and the 50-period moving average. If we go down real slow, we could get a combination of 14,000 and the 128-day moving average, which could be another good time to pick up some Bitcoin. So I am waiting to buy this dip, but I am not yet buying. I'm not a buyer today. Normally, Bitcoin likes to rise through the weekend. I will, and who knows, on Monday, GBTC took a big hit. Here's GBTC. Let's go to the daily chart. Market should be open today. Look at that. Look at that monster gap down. Not surprised. That is a huge fall. Now I'm very happy I got out here. I got out very little the other day. Wish I got out more. I was an idiot, but that's okay. I'm here to buy dips. I'm not here to, because it would have also sucked if I would have gotten out 100% out of my GBTC and then it goes higher. So I'm okay holding on to some of it, but I would love to buy this somewhere in the $15 range. So I would love to see this fall back to about 15-ish. That would be a great pickup for me. That's pretty much it. Gold continues to fall. Like I said, I am still bearish gold. I would like to see gold at 1750. We're close. that is close enough. 1775 is pretty damn close. But this does not look like a positive. There's nothing here to be happy about. I will wait. We're close to an MRI buying opportunity, probably 3 candles away. If I turn on details, anyway, if you turn on details, I have to refresh this 1 second. Oh, click wrong thing. Let me just refresh this chart. God, this computer is so much faster than my other one. It's amazing. And I haven't even expanded the RAM yet. I'm still working with, I think this is 32. I can take it to 48. So I can turn on my numbers, and I'll probably see that I'm 2 candles away from an MRI buy. Oh, 3 candles away. How about that? So you still have 3 more days. So sometime next week, you're going to get your MRI buy opportunity in gold, and I may just take it because that's a big drop. What I am curious about is, I don't want to take too much longer. The show is already long enough. The ratio between gold and silver. So if I just put ratio, gold-silver ratio, because I think this is going to 200. And, oh man, I was hoping that it was still going down. Shoot. Because I really want to convert all my silver into gold. And this would have been the worst time to do it. And this would have been a nice time to do it. Look at the MRI bottom in the gold-silver ratio. Also marked the bottom pretty well. And I think once gold reverses, so silver is taking a bigger hit right now than gold. And look at this arrow right there. See, this is where I'm thinking it's going. I think this thing is going way up. Because I think silver is completely useless as money. I've talked about it many times. And I think that ratio is going. So if I'm, since I'm sitting on a bunch of silver, physical silver, because I listen to too many silver bugs, I need to convert that into gold or Bitcoin.
Bitcoin.
I don't know. I'm still skeptical. Okay. Bitcoin can go to 0. No, I'm kidding. It won't. But an S&P 500 going into the weekend, I am kind of bullish. Florence, do you have questions, or do we have questions from a live audience? I don't know if you're watching. Oh yeah, the 1 hour. Sorry, the 1 hour looks horrible for Bitcoin right now. This is a classic double bottom. It's a classic lower swing high. The lower swing high was so weak that it did not even make it to the prior swing low on the wick. So this is not good. And the break of this line one more time, I believe, sends Bitcoin lower under 16,000. So I am still short-term bearish on the hourly, on the, this is a 4 hour, sorry. On the, I'm bearish on the hourly, I'm bearish on the 4 hour, I'm bearish on the daily, because I think this, because this did not top on an MRI, I think this will be more than 4 days worth of downside, because I believe that it will be, I shouldn't go to a daily chart there, because I believe this will be 1 to 4 weeks of downside, and we're still working on week number 1. And in addition, as people recently pointed out, there was a very lovely looking 3-day chart giving you a perfect MRI double consecutive top. So lots of things here pointing to more downside for no other reason than Bitcoin went up a little too far and a little too fast. Classic buy the dip coming up. Okay, now I'm done.
Awesome. Thank you so much for that great analysis, Tone. I think that's it for today's news, unless somebody has anything to add. Tone, Jimmy.
All right. Hey, guys, thank you for watching. It's been another great week. I still have all my stuff on sale on tonevays.com, on-demand videos, MRI. Everything is between 25 and 50% off, with the MRI having the biggest discount. So check that out. The MRI comes with educational videos. So make sure that you have the email of those educational videos if you sign up. The whole system is automated. So just use the website. If a Tone Vays messages you asking for money, tell them you're broke and that I owe you money instead. That's how you deal with imposters and scammers. The moment you start asking them for money, they quickly go away. So check that out.
Okay, thank you very much, Tone, our Bitcoin educator and trader and host of Unconfiscatable Conference in Las Vegas next year. Please make sure you check that out. And also thank you very much, Jimmy, our Bitcoin expert in programming. Pick up his copy of Programming Bitcoin as well as the Little Bitcoin book. And I'm Florence Correa, journalist and your host this Friday, 27th November. Thank you so much for joining.